Welcome, Brooker Belcourt. I'm excited for this. This is what maybe episode 8 of Cutting Edge, where we attempt to explore the cutting edge of combining institutional fundamental equity research with some of the leading tools that investors are using. Perplexity has been a tool that has been putting a lot of time, capital, and intention into building in this space. So really excited to be joined by Brooker Belcourt today. I'm going to give a brief, roughly 10-minute introduction to kind of frame a lot of the conversation. I find one of the big barriers to AI adoption for institutional clients, institutional investment analysts, is kind of the white page problem of not really knowing the context of how to deploy tools. So we'll do that in just kind of a short 10-minute brief. And then we're doing a very kind of risky thing today, where we are going to actually show the Perplexity platform live. And Brooker and I are going to do a little bit of role playing and pretend that we're back in the institutional investor seat and use Perplexity to try and see how close we can get to what we would deem institutional quality outputs in sort of what we call in our program a sniff test. Um, so welcome, Brooker. While I pull up my slides, you want to give the group just kind of a short introduction to your background and to Perplexity.
Yeah, happy to. It's great to be here. I'm really excited for this unique content to do like 10 hours of research in 45 minutes live in front of hundreds of people. So really looking forward to that. I think it's Perplexity is an answer engine first, and we differentiate on trust, and you'll see throughout the demo how we differentiate by integrating more data sources, by giving citations and really easy ways to audit all the data. For those who haven't heard of us, Perplexity does about 30 million queries every single day. We're one of the largest AI companies out there, and we're model agnostic. So we aggregate all the models to give you the best answers. And my background is similar to Brett's. I've worked in the hedge fund world at Coatue and Citadel, and so I will use some of that knowledge to apply it to a real world example here today.
Great. Well, thank you. Thank you, Brooker. All right, I will go ahead and share my screen, go through a short slide deck, and we will go from there. So we're effectively going to conduct what I'm calling an AI augmented thematic sniff test. We will be talking about individual securities in this session. So a very important disclaimer: nothing here will be investment advice. This is truly for educational purposes. I can't speak for Brooker, maybe I can, but we're not going to be trading these ideas long and short. At the end of this 45 minutes, certainly. However, as kind of a pure legal disclaimer, we may take positions in any of the discussed securities. So effectively, what we are doing today and what we do in our core Fundamental Edge program is we attempt to teach the institutional equity research process for a 6-week, 60-hour program. And it really aims at targeting one basic question that strikes terror in the hearts of new institutional equity analysts: take a look at the stock and let me know what you think. It's very difficult, seems like a banal question, but knowing where to start and being able to hit the mark on institutional quality research is very difficult for junior analysts. It certainly was for me. It really contrasting this to retail investors. Retail has been kind of dominating price discovery again. And, I saw this chart that the average retail investor spends 6 minutes researching a stock before trading. Institutional investment analysis stands in stark contrast to that 6-minute analysis. It can be anywhere from 30 to 100 hours of rigorous investment research, and really thesis-driven investing is what we've observed and what we teach. It's creating a structured argument, rigorously researched, succinctly presented, that advocates for an investment case. And so we talk a lot about how to kind of build the building blocks of the fundamental process. What are the tools to use and deploy in your process to create that exhaustive expertise on a name to ultimately see something about the key drivers that the market doesn't see, develop that variant perception or unique perspective expectation gap in the marketplace. Traditionally, there's been no shortcuts to this process, right? Traditionally, as I was trained, as we train now over 1,200 analysts, much of this is done via just good old-fashioned work, reading 10Ks, primers, talking to the sell side, to management team, doing studies of past failures and successes, creating industry aggregate P&Ls, balance sheets, and cash flows. It's a lot of hard work. And this process builds into the judgment, right? The process to gather information, generate insights, and ultimately to be the smartest person in the room, which I put in air quotes because obviously all hedge fund analysts can't be the smartest person on the room in a given name. But ultimately, the process of generating a thesis is collecting and synthesizing this information to generate insights, to generate these investable insights that feed into the decision-making process of building a portfolio and selecting individual stocks. Now, that overplays the full rigor to some extent, because to a large extent, I'd love to have the slow path towards truth in every investment question, to be able to study source truth exhaustively. In practice, often you will see requests like, hey, I need you to become an expert in the copper market in 2 weeks. Today, we're going to role play with a request from our made up CIO that, hey, Brooker and Brett, give your insights, initial thoughts on ways to play the driverless theme in 24 hours. And so you can't always study source truths exhaustively in investment context. You have to tap distillers, those others who have distilled source truth, other buy-siders, sell-siders, consultants. And I would put AI in there as kind of a technological distiller in this sort of high-level process. Traditionally, I think most would agree that there is some degree of efficiency frontier in investment research, that to really create your deep insights, right, requires a deliberate investment process, that we can shorten that process, but at the risk of those deep insights, that we can generate shallow insights with a quick process, balance insights with a balanced process, and deep insights with a deep process. One of the most intriguing elements of AI is not, hey, I can summarize transcripts and summarize a 10K, but that actually across all of these dimensions, if I'm a deliberate investor, I don't necessarily need to short circuit my process, but I can achieve deeper insights with AI. If I'm a balanced investor, I can deploy the same amount of research time, but generate deeper insights. It's really the speed to insight and depth to insight, to me, as I talk to clients, as I think about this intellectually, is a promise of AI. As we go through the investment process, as we will today, kind of the sniff test process, just because you've read a 10K or a sell side note does not a thesis make. A thesis starts with a simple hunch, a musing of, hey, maybe this is interesting, maybe there's something to play here. And this is really what we'll be exploring today. We'll be exploring a hunch on ways to play the driverless theme and really formulating a hypothesis that we can go back through and validate with deeper research. Ultimately, that could become a thesis. Traditionally, the front end of research process as we train it is kind of a sniff test, or your first 12 hours in a stock. And it starts with kind of basic reading. Read the 10K, read the last 4 transcripts, read these documents, and maybe 10 hours, 8 to 10 hours of just pure reading. Create a basic annual model, graphs the narrative, build a bull-based bear, kind of get a general sense of the lay of the land. And so this is what we'll really be attempting to replicate with the system today. And really what we're going to talk to today, I'll finish up my slides here, is in practice, it may look like this. It may look like our hypothetical CIO went to a conference in Scottsdale, rides in a Waymo, comes back and says, hey, Brett and Brooker, I rode in a Waymo. I wonder if there's a long or short opportunity in this ecosystem. Let's discuss tomorrow to discuss our initial findings. So Brooker and I look at ourselves with terror in our eyes and be like, holy crap, how are we going to have something intelligent to say in 24 hours? Traditionally, a ramp approach might be a 10 to 12 week process to really do this the right kind of slow sort through way, where I define the universe, understand the lay of the land with a lot of introductory reading, primers, initiations, bellwether 10Ks, investor day presentations, key industry books. I do my up to speed work, develop a framework of understanding the key metrics, the key drivers, the competitive positioning, start to develop my idea buckets for deeper thesis development, building my critical key infrastructure, the company models, industry models, idea stack tools, and understanding and ingesting the data, creating a data portal with both free and paid data to analyze the key drivers here. And then, much of thesis work is not just desk work. It's getting out in the field, developing a key relationships, getting on the phone, and then ultimately bringing all that research into generating trade ideas and build monitoring architecture. And so we obviously won't get, this full 12-week process done in 45 minutes, but I'm excited to see how much of this slide we can get done. The last slide of the deck is a sniff test on thematic leverage, and we'll kind of come back to this slide. These are kind of some areas or prompts, if you will, not structured prompts that that were some areas that if I was kind of looking at the scene for the first time, I would want to understand. All right, with that, thoughts on any of that, Brooker? I will make you co-host so you can. You're already presenter, so you can share your screen. I'll let you drive Perplexity. And the question is, where should we? What do you think about that, and where should we begin in this process?
I love all that stuff you laid out. I think it's really thoughtful the way you've gone through the process. And I know you've been thinking about this for years, and you have the actual like real on the ground experience from Citadel to develop this. So I love it. I think that last slide is amazing because that's like such good questions to think about a stock. So share my screen here. And I'm going to jump right into it. So here, we're going to start on Perplexity. And so we've got to look at the ride hailing industry. And so I don't know it so well. So I'm just going to think through, find the most compelling like bull case on Google, Tesla, and Uber, and draft up 3 to 5 bullet points on each of those. And then at the end, rank the most compelling stocks to least compelling stocks of those 3 that would win from the Robo-taxi market. So I'm going to try this one and fire it off right away. And so we're going to let this run for a second. So that's the bull case. What I love about Perplexity is it does this, is like I had the chance to sit down with Julian Robertson when I was in the hedge fund world, and he loved pitches. He loved hearing pitches. And whenever he would get a pitch, he would just like call 3 to 5 people in his network and ask about that pitch that you just made and see where your holes were. And so with Perplexity, it's like everyone can search like a billionaire. You can do this stuff so fast and get an opinion from experts in seconds. Before that loads, though, I want to actually get the bear case too. So I want to do go through the 10K for Google, Tesla, and Uber and find me the risk factor sections and then build a table comparing the different risk factors across those companies. And I also want to actually like toggle on SEC filings because I want to use the source here, and I'm going to do some deep research on this one as well. And while this is loading, before I see this, like this is going to be a consensus view. So before I see that, let's just, Brett, you and I like come up with our view as to like how you would rank these, just to see like how our research could change these thoughts. And Andrew, if you want to hop in here as well, give me the top rank. I think to me, like Tesla is probably the winner here. Like, don't bet against Elon. And then I think maybe Google would be number 2 for me. And then I don't know how Uber wins in this. But like Tesla, don't bet against Elon. I think Google, it's like leader now, but will they maintain it? And then Uber, I don't see how they win in a robo-taxi world. It seems like they may actually be a loser here. Would be curious your thoughts here, Brett, putting you on the spot.
Oh
Where would
man,
you rank them?
I don't even know if I know where to start. I mean, obviously the context of the starting valuation matters a lot too. I mean, I think that's the tricky part on Tesla is, yeah, they may be a winner, but it's already baked into the stock. Having done no I'm in the Phoenix area, so I see Waymos everywhere. So I wonder if, one of the questions I'd want to answer in this 45-minute process is how much is baked into Google's price from Waymo? Are they a leader? Well, they seem to be a leader. Can they maintain that advantage? And how much ultimate earnings power can be generated from this trend? So it's a little tricky on Tesla. I don't know, because I think the first step to me, Brooker, would almost be sizing the TAM, sizing the profit pool
Mhm.
7 to 10 years out. And then, Tesla's an expensive stock, so it's hard for me to sort of eyeball whether that's embedded,
U-
embedded
And then
or not.
Uber, where are you on Uber? You think there's the loser in this one?
I mean, I also don't know. I'm obviously a healthcare investor, so maybe
Yeah.
I'll say unsure. My hope is in this 45 minutes to generate some incremental insights. Google to me is intriguing because at a lower multiple, if you believe they won't completely fumble AI, then maybe driverless is a free call option. But I think I'd want to kind of size the earnings power potential there from Waymo, understand competitive dynamic relative to Tesla to be more confident in that view.
Okay. So let's do just like thinking about what this is like what consensus thinks. If you're gathering all the information from the internet, this is what they think. So here's the bull case on Alphabet in the Robo-taxi. I mean, AI, yes, leader in AI. It's got a monopoly in search. Obviously, there's other parts of the bull case on Google as well. So unmatched world class. Yeah, and in multiple jurisdictions, actually, let's see where it's getting that. Okay. Yeah, I mean, they're clearly like Google's winning it right now with AI and furthest along regulatory. So Tesla consensus call would be it's all about potential. So ARK is a huge investors. Morgan Stanley's saying it's going to be huge as well, 1 billion miles by 2030. Okay. So yeah, it seems like consensus is probably agreeing with my view on Tesla being the top. The Uber one's the most curious for me. Um, so they're doing the operating system. Oh, and they've done partnerships with Waymo. I don't know these other ones. Okay, so it just looks like they're trying to fragment the industry to not be like reliant on one sole vendor. And Ackman is invested in here. Okay, that's interesting. We should explore that a little bit more. Um, okay. So they do have a strategy. Let's see where the market is ranking it. Number one, Google. Number two, Uber. Number three, Tesla. Okay, so people are a little bit bearish on Tesla right now. And let's just make sure when we look at the risks. Okay, see if there's a table here. Okay, so I would just be mindful of these. I like to think about the risks that are in a 10K, like are pretty close to being the bear case. It's going to be hard as an analyst to come up with a really strong bear case that isn't mentioned in the 10K unless you're like incredible at accounting. Okay. Okay. So it's yeah, regulation. Let's think about regulation a little bit more. Okay, so now that we've gotten that out of the way, we just have to start gathering data. So I really want to go to the IR websites for Google, Tesla, and Uber, find the most recent IR presentation, and get me to the page to download it. So I'm going to start to trigger that task. As that goes on, um, I'm going to want to start getting some transcripts in here. And so in here, we have on the finance page, got a lot of information, but we also have transcripts here. So I'm going to start opening up a bunch of transcripts and downloading these. And okay, now it's opening up these pages right here. I'm going to download this as well. So this one, okay, so we're moving through Google, Tesla. Okay, so we got Tesla, let's do Uber. Got Uber, supplemental information, just gathering a ton of data because we're going to need all that. I think you were saying we need transcripts, what else do we need? So we've got here, okay, that's fine. We've got transcripts, so we need some presentations here. Let's do earnings slides. Okay, so we've gathered a bunch of info. Um, and I'm going to go here and grab some other stuff as well. There's some fun spaces here. Here's some transcripts for a bunch of different companies. I'm going to pull that, and I'm going to want to build some comps table. So this is in /finance, so we can build some comps table. I'll use those guys later. So now that we've got like a bunch of information, I'm going to create a space. So a space is kind of like a little area that you can go into and research specifically like the robo-taxi industry. And um, and I want to give this one a prompt. Answer any questions using files from this space. Always answer in bullet points. Focus on the robo-taxi industry as context, focusing on the key players, Tesla, Uber, and Waymo. In every answer, give an executive summary at the top. So I'm going to give this one like a master prompt. And so that way, like when we ask it questions going forward, we can get really compelling answers. And now I'm going to start loading a bunch of information to this space. So here are those things I just downloaded, Alphabet earnings. I'm going to upload a bunch of other stuff in here as well. Let's see, I'm going to upload some transcripts that I downloaded as well, put those in here. So now I'm going to have like a space with all those things. I think we've got basically everything. We've got SEC filings. We can just toggle them on. We're missing models. I think we're just going to have to like put models on the side for a minute. So now I've got all these transcripts in here. So I saw some interesting tabs that I'll be able to take off. So I saw some interesting tabs in here, the S&P 500 transcripts. I want to see like the management perspective. So go through all the transcripts for Uber, Google, and Tesla and tell me the management view. So go through all the transcripts for Uber, Tesla, and Google and tell me the management view on the robotaxi industry and how they're planning on winning in that industry. I'm going to run this and just see what they say. So this space has a bunch of transcripts in it. So I can see like what management is pitching on this industry. So I'm a little bit curious about that. And as that's running, I'm just going to check on this one. Okay, so I'm going to have to do some of these on my own here. So I'm going to go into my robotaxi space, and I'm going to start pasting in some of these queries on market size. Do a little bit of move here, turn on labs. Labs is a new product that we just launched. That's really a data scientist. And so it's going to be able to produce some charts for us. And I'll be able to run all your queries that you put in here. So grabbing these ones here. Let's just grab a bunch of these. And then we'll just jump over here. It takes about 4 minutes to run them. Let's do labs, toggle this on here. And then here, I'm going to do another one. Capital cycle. Toggle this on here. Do another one. Andrew, I'd be curious your thoughts on this as I add all these queries in here.
I'm watching with rapt attention as I myself am an avid Perplexity user.
Yes. What was your thoughts on bull bear for each of these three companies? Which one would you invest in?
I think people are probably most interested in how to use the tool than my individual thoughts on the ranking. I'd probably shake out close to consensus because I haven't done differentiated work.
Okay, so we got a bunch of those queries in. Amazing. So
Maybe, Brooker, while that
go on.
runs, we should just take this piece by piece. What do you think?
Yeah, so we've got these 7 or 8 queries running, and then we'll go through that. And then let's get rid of some of these tabs. We're moving pretty quick here, so I don't think we need those. Got all the transcripts. Oh, we've got the management one. Let me do that. Okay, so let's just see. So what is Dara saying about this? So basically, they think they're going to do quite well, and they've established partnerships with Waymo. They got 15 AV partners. It looks like when you think about the industry dynamic, I would say like Uber seems to be a winner if it's a fragmented market of AV players. So if their supply chain is fragmented back to like Porter 5 forces, then they do well. And so I viewed that it was not fragmented, but it seems like they're trying to make it. And they have a huge amount,
Yeah,
170
I'm kind
million.
of less interested in what the management team. I mean, obviously Uber wants to, will tell us something that is useful for Uber. Maybe we should start by just thinking about like starting with the TAM analysis and market share. So what data or like what comments are out there to help us size the TAM? The way I might do that is to kind of think about, okay, what could industry revenue be 7 to 10 years from now? So maybe that's kind of a good starting point of how could we size the revenue, size the market share, and then think about the profit pool available to the leading company. So how might we use Perplexity to do that?
Yeah. And so I'm just going to put this here for later because I think that's going to be a little bit interesting, but let's go through. So basically, the way I would think about market size is you just want to use labs in these types of queries. And so we've uploaded a bunch of information, but there's also like a ton of information on the web. And so when you use labs, it's going to go pull the information you loaded plus a bunch of information on the web. So like consulting reports on what this information will be. It looks like it's taking it from a bunch of different research providers, Fortune. And then what it's going to do, that's really interesting, is actually going to take all that data and then put it into Python and then start producing charts for you. So we should have like our first version of a bunch of different charts. And so this should get us like a decent amount of estimate for TAM. So start going through here. So basically, it's 2 to 4 billion. So you want to, how far out do you think you want to get your
Let's go
TAM
out to
at?
let's go out to 2035.
2035. So ARC is saying 10 trillion market
Okay,
by,
let's
oh my
let's throw
God,
ARC out as a unreliable source.
10 trillion. Okay, so it's 10 trillion, then 2032 is 135 billion. So basically, you've got your conservative at 25 to 46, 40 to 100, and so then it's 135 billion. So we're probably somewhere around here in the 5 to 10 year market projections. I'm going to take this right here because that solves
Sorry,
our.
who's that? Who's the moderate growth coming from?
The moderate growth
But
is
who's
coming
the who's the
from
source on that?
Coherent. So let's see what we're doing here. Let's go Coherent. Robo-taxi, 135 billion. So Coherent Market Insights. They've got a decent range there. Let's go back and see who else is saying this. That seems like it's consensus. If you just look at, okay, Research Markets, Robo-taxi report, Patent PC, another Robo-taxi report. That seems like the most likely one, just given the amount of people. And then let's see what this person's saying here on LinkedIn. Robo-taxi, huge market potential. Okay. So I think we're around 100 billion in 5 years. But let's keep going and just seeing industry profit pool. This is the key thing, right? If you're thinking about like where is it, you could have a winner, but like where is the value actually going to accrue? And we're trying to decide if it's going to be the manufacturer, the software AI layer, which seems to be Google, or the distributor seems to be Uber. And here's where the profit pool comes. So that's using 130 billion. Okay, so here we go. Here's the economic impact. 90 billion in profit. So they're basically saying 90 billion if they have 2 million vehicles on the road. Wow,
Yeah,
ARC
this
is
is
just
this is where I struggle a little bit with these tools, to be quite candid with you. It's like
yeah.
I don't know. I haven't heard, like, when I see ARC source, my BS detector immediately goes up, and I don't know How do we kind of think through the reliability of I'll believe a McKinsey report perhaps, but not an ARC or a YouTube or a random blog.
Yeah, I think like what you would want to do is as you're in here, like what you can do in the RoboTaxi space is you can start to give it a pre-prompt where you say like, value consulting firms like McKinsey, Bain Capital, BCG for reports over others. And so you can have that prompt in there, which will give you like a little bit more insight, as opposed to using the one that we put in there. Let's just see. I don't think you're going to be too far off the 100 billion in the early days. Let's keep moving through this one because I think we have another query in here too, which is the unit economics. Okay, so we've got unit economics for this. Okay, so that's 80 cents per mile. Waymo is like significantly more expensive. Yeah, it seems like Waymo is just far more expensive this one. Oh, the driver elimination, 65%. Okay, that's good to know. So basically, a driver in this industry is 65% of the cost. And so that's the huge saving. Okay, wow. Okay, so traditional taxi is 350 per mile, whereas an Uber is $2 per mile. Tesla's thinking it gets to 80 cents, and then Waymo. So in terms, it's like a significantly cheaper model. Let's actually grab this chart here. This is really good for us. I'm going to throw it in here. Unit economics, really helpful to help us understand. And then let's just keep going. What do you think about this unit economics analysis? Cost per mile.
I'm so far not really getting anything useful to be honest.
Okay.
Um,
Is it that you want to see more backing as to where this data is coming from?
I think that's a big one. Yeah. I think that's a big one for sure. I'd almost kind of would just like reverse and try to think about maybe we have to think about the underlying components of TAM. I mean, the way I would kind of think about this, let me share my screen for a second.
Yeah, and I just would say like this is the McKinsey report as to like which one's cheaper. Public transit is cheaper. But yeah, let me stop sharing for a minute.
So the way I would kind of think about just an initial sniff test from like a thematic sniff test is to start with what we think the industry revenue is today, if we can find reliable data, how we think that evolves over the next 10 years. What are the unit economics of these models? The winners certainly, but then who loses? How does the profitability evolve, the market share? And then I think the key investment trigger is to try and understand the profit pool and how the profit pool breaks down to your point for the various players. So it's like kind of a little bit back to my point of like, is Tesla long or short on this opportunity? Like, well, I don't know. I don't think you can know until you actually have done the math. I can observe that the street believes Tesla will earn 6.5 billion of operating profit this year. The question is obviously what's much more deterministic of the stock long term is where does that profit pool go? So I think that's a sort of like the insight we have to kind of get to in terms of having this be a useful exercise is how can we use this tool to generate at least an initial view on how big the industry can be, what's the profitability of this model, and what is the market share?
Let me keep sharing here. Let's see
I
what we
definitely
can
agree.
get.
We had one commenter, say, how can you trust a blog post on the internet for estimating TAM would think this data proprietary, and I completely agree with that. I think that's been like a problem. One of my pushbacks on using many tools is kind of like the believability of the sourcing. Even in McKinsey reports are, routinely off by magnitude. So if we're kind of building an investment thesis based on this data, almost we should kind of have our own view of what the TAM is to start.
Yeah, I think you got to think about like, well, what is a source you trust? Like, do you trust SEC, right? You trust transcripts. Like I trust the McKinsey report. I trust like a Reuters as well. I would trust I think I would trust ARC in terms of giving me a bull case. And then like Wikipedia as well, I would probably trust as well. So there are sources in here that are like pretty good. I think you want to go a little bit deeper. I think like the key thing to take away is this is like an initial run. So it's like, okay, well, like what I'm learning here is that huge amount of capital required, obviously a massive TAM associated with it from different players. Um, and when you think about it, okay, well, if your question is about the capital cycle, then you require a huge amount of capital. And so if you think about the three players we're looking at, you need a huge amount of cash to be able to do this. And like plus or minus 20% on the TAM or the capital, I think it's going to give us like an idea as like what it's going to take to win here. The crazy capital efficiency, because as we saw, like the unit economics, you drop off 65 cents on every dollar for going driverless. And so I think like we're gonna get like ballpark right, and then we're gonna have to like go in much deeper to be able to figure it out. But I think like the high level stuff and just like getting us to like where do we want to spend time is what I'm hoping to do here. The capital intensity is actually insane when you think about what's required for this. And
Yeah.
if you think we saw that I think I saw it was like $200,000 a car for Waymo, and then I think it was like $50,000 a car for Tesla. And so the capital is going to require like either dilution or just a huge
Yeah,
outlay.
I think we're kind of stepping ahead on that point. Can I drive for a second with Perplexity, Brooker, and just
Yeah,
so I have Perplexity pulled up here as well too.
yeah,
So I think the key point, if we're going to generate any insight out of this, is like what is this TAM number? And so I asked Perplexity, and again, this is a little risky because I don't really know this industry. So I asked how big can the Robotaxi TAM be, do a build up for me in the underlying logic, right? So rather than trusting, I don't think ever, like if an analyst came to me citing an ARC report, I don't know, I would certainly use expletives to some degree. So I'd throw that out. What even like a Frost and Sullivan, I mean, I think the believability of these sort of estimates are low. So where I might start, which is an interesting thing, is to start with the fleet size, and maybe we just start with the U.S. So like, what's the fleet size? What is the auto fleet size in the U.S. currently? Um, and we can kind of do the build up from there. So right now we have 300 million registered, 298 million registered fleets. So let's kind of do maybe the TAM this way rather than a fleet size 298. What does that give me some thoughts on how the fleet might be impacted with driverless. So let's think about Brooker like an estimate, and maybe you can do this on your end too, of like how is the fleet impacted by driverless? Like what is the total fleet size, the fleet size of driverless in sort of a 10-year 10
yeah.
year
I'm
thing?
seeing one of our consumer adoption barriers. So I ran that report. So basically, in San Francisco, Waymo's at 22% market share
Mhm.
of taxis in 15 months. And so let's just get the fleet size for Uber, which is in another report, like how many drivers are on Uber.
Yeah, that's good.
And then we can assume that 20% is pretty realistic. So they've got 6 million active drivers. Um, and then they're doing 28 million trips a day. Um,
Uber.
so let's just use the 6 million. So they've got 6 million
6 million
drivers and couriers.
driver. Yeah, 6 million. All right. So
And I think we saw another one that Uber was like 50% of the market. So let's just double that to get the rest of the market.
yeah, so I don't know, maybe like in 10 years, a fleet size, like a driverless fleet size of 40 to 50 million. Does that seem like how does that seem to you in terms of if we come at TAM from like a fleet buildup?
Yeah, that seems pretty close to what I'm seeing in the other estimates. Let's go with that.
What are the potential revenue per unit of a robo-taxi at maturity? So let's see what this pulls. So let's build that up from fleet size. Let's say that of the 300 million current fleet, over the next 10 years, we get a 15% adoption of the fleet. I wish I could turn ARC off as a source. You know, 2 cents at $2 per mile. It does a little build up. Let's see. Most credible projections are annual revenue per robo-taxi maturity cluster in the 30 to 70,000 range, with premium markets or high utilization vehicles being 100,000 or more. Okay, so that seems like not a crazy range to me. 30. So this is like 100, a 10 to, sorry, 30,000. Um,
And so per year, there's like, if you want to do a mile, so we've got like 40 million, 45 million cars. They each drive like 20,000 to 50,000 miles per car. And then we saw the unit economics at like $2 cost per mile.
yeah. So the midpoint of that is basically a $2.2 trillion TAM, which let's cross-check that of
Isn't that what ARC said?
what's the current fleet value. Yeah, 14.5 trillion. So the value of the current fleet is 14.4 at 48,000. Okay, so 2.2 trillion is kind of like the normal. Yeah, to do. So then, what would be like what's the profit pool from that 2.2 trillion dollars effectively? Then, like, and maybe if you want to steer on this one, like, if this is a $2 trillion industry, like, how profitable is this for the various players in this industry?
Yeah, that's a great question. Let's see if we can think about what that is. So I'm going to pull up I'm going to just go back in here. So you got total revenue as what?
2.2 trillion.
So I'm going to pull up here. Um, This is just going through some more market size and trajectory. I think like one thing to keep in mind is I just want to, before we like go too crazy on that, is the consumer adoption barriers. So one thing I didn't realize is like weather is a huge barrier. These things can't actually drive in the snow. So it's like maybe we're being a little aggressive because in the winter and like anyone in the Northeast, like you can't really drive these things. And then there's like a regulatory issue as well, and some infrastructure dependencies. So it's like it's maybe that how that 2 trillion comes down because there's like an incredible amount of challenges. And I guess the reason for Phoenix and San Francisco is because the weather's fairly easy and and it has really good infrastructure. So just thinking about how long it will take, but let's get some more like economics analysis of these different ones. I think we had that one per unit economics for Waymo. So Waymo, it's going to cost them $200,000 to build it, and it's going to cost them about $1.80 per mile. And so I think like the key question is where does the profit accrue in this industry? And so will it accrue to the manufacturer or the distributor? And so that one is like where you could probably be contrarian if you had a view on that. So if you think about, well, how is Tesla going to react in this market versus how is Google going to react? Are they going to drive pricing down by competing head to head, and then all the benefit accrues to Uber? I'd actually like would probably want to go and understand like Ackman's view on this, as having done some research to think about like what the economics could be. So here's the AV. So his view, yes, is it's going to be fragmented, and the winner is going to be the supplier because it has the distributor, because it has a dominant position of the distribution of rides. So like to come up with a unit economics at this point feels like really, really hard. I think we can agree on the size, but I don't think we know where the unit economics will flow. Even a good way to think about that right at this point in time.
Yeah, that's a tricky one. I mean, we can kind of make some bets. I mean, I think we have, can I show one thing on Google?
Yeah.
And I think we have enough to kind of so there's a few things. Like an initial hunch I had was, could Waymo be a free call option on this industry? And so I think one kind of simple way to think about that is the thematic earnings leverage. And so let's take our 2.2 trillion that we're getting to in 2035, which is a midpoint of 15% fleet adoption, 30 to 70,000, 2.2 million. A commenter made the good comment. You could also kind of look at revenue per mile or cost per mile and build that up on a miles basis for profit pool. But let's just do this simply and kind of think about the potential operating profit potential for Google and Waymo at these assumptions. Assume a 20% margin, 25% share. That's kind of 100 billion, sorry, of operating profit. 100 billion of operating profit, off of 127 now. These are different. I need to do these are in billions. So that these numbers could potentially lead to a large uplift in Google's operating profit at these numbers. Although you kind of have to get comfortable that this is a big transition that will happen. The profitability, I'm not sure what ultimate bottom line profitability is. Maybe it's 10%. So that'd be something we'd have to kind of think through as
But
well.
yeah, when you think about it, if it's $200,000 a car and you have 44 million cars, so 44 million times like 25%, like you're talking the investment they would have to make would be over $1 trillion to be able to have that sort of a market share.
Yes, yeah, yeah. Which is another consideration. Is the capex really there to support that?
Plus, they're gonna have to face all the regulatory hurdles. So if we were like, if I think like stepping back, like let's just pull up the models here. So I'm just in the financial section here. Like as you're saying, net income roughly 100 billion. So if they do this everything well, they could get another 100 billion. They could double it. Whereas if you look at like let's say a Tesla or an Uber, right? They're not going to actually have to invest much in terms of capital to be able to get into this market. As long as it stays fragmented, they could get access to that similar 100 billion in income, and they only have 10 billion right now. And they would make probably like similar margins. So they're actually in like an incredible position. If you think about like they don't have to raise capital, they own the distribution. They don't if this thing works or doesn't work, they still are in a fine shape. And also the weather limits this to be 100% of the US, and the regulatory hurdles will probably limit it in certain markets. It's like Uber's position, I can kind of see Ackman's point here and they're also trading at a significantly lower multiple. And so let's just see overview quick. Yeah, they're trading at a P of 15 times. Then let's just go through Tesla just to be fair here. And so just from a capital perspective, so let's go through financials. If we say 100 billion is a good target, that's a big deal for Tesla, obviously. And so let's see how much cash they have on hand to be able to actually do this. So the balance sheet. Oh, we can do the key stats. They have 16 billion. I mean, they would dilute their entire company to be able to get there. But I think I'm putting like Tesla and Uber much higher at this point for like impact versus cost to invest based on your capital cycle prompts.
Yeah, yeah. Should we take, it looks like we have a couple hands up. Should we
Yeah.
take any comments, feedback, or questions on this? Let's go first to Collins. I just hit the allow to talk if you want to ask a question or make a comment.
Sorry, actually. Just really interesting. I also was thinking about Brooker. Obviously, we have a little bit of a relationship, and how you think about integrating premium data, if at all, into the experience. And that doesn't necessarily just have to be, ours. Just overall, do you think you'll continue to focus on the public web, or do you also think about premium data experiences and some of the experiences you're creating?
Yeah,
Thanks for
I
the
think
opportunity too, and great session, Brett.
yeah, I think there's like, with Perplexity, you can add like SEC filings, you can add your connectors like Google Drive, OneBox, you can also add FactSet data. And so if you wanted to go through and say, what did Tesla say? What did Tesla say on their most recent earning call about Robo-taxi? If you have a FactSet subscription, you can be able to call this function. And now that I've turned on FactSet, it'll actually use premium data, which is really interesting, like bring your own license style model for those who have the subscription. And so, yeah, we're investing in that too. Again, to Brett's point, like you're gonna be able to trust this data. And like the only way we can replace or we can augment your process is to use premium data. And so here you're sourced to some different transcripts. Let's see where it is. There's the FactSet one there.
Yeah. Yeah, that seems like a really promising angle to me, Brooker, because it's almost like I kind of shut down seeing this demo, to be honest, when I start to see the sources that are cited. It's like it's hard to build the foundational sort of building blocks of the analysis off of, even though ARC might be right. I'm just saying ARC might be right on that number, but in terms of like the partnership with data vendors that we could kind of vet and trust and be able to turn on and off various vendors. So I kind of been feeding in the true institutional quality data analysis rather than, I mean, one of the fundamental analysis problems I have with LLMs is like it's formed off a web scrape. Like the collective open web doesn't really know how to generate alpha with ideas. And so we're kind of pulling in consensus thinking, consensus data, and it's actually worse than that sometimes because what you're getting in a web scrape is Yahoo and YouTube videos and any sort of random whack job writing a LinkedIn blog post. So it's hard for us as like institutional investors to have belief in those underlying sources.
Yeah, so we've got the SEC integration for that. We're going to add some more integrations that give you access to like premium data. We've announced some of them, so looking forward to that.
Yeah, that would be that would be great because it's kind of hard to trust the reason. Like the reasoning seems good, but it's hard to trust the reasoning if the reasoning takes place on data sources that wouldn't be above that sort of quality threshold.
Yeah, let's
Is,
jump. There's a
is,
bunch of questions here.
is there a
Looks
way
like we have a
to,
question from Nash. Nash, I hit allow to talk. Nash, are you there?
As he's getting set up, let's keep going. Let's see some other question.
there was a comment that came through in the box. Booker, could you talk a little bit about the extent to which certain sources can be excluded or de-weighted or discounted? Understood that you could be pulling from a variety of different sources of, along a spectrum of utility. Is there a way to instruct within Perplexity to prioritize or deprioritize certain sources? So not necessarily exclude them, but not lead with those.
Yeah, you can basically, so if you want in here, you can select the sources. So if you turn web off and turn finance on, that's only going to be using SEC filings. So like you can ask don't have to do a demo, but that will only use that source. Same thing if you want like FactSet, turn it on versus the finance ones. And so that deprioritizes it. If you want them both on, it will naturally prioritize finance. But you can also in your prompt give it instructions.
Yeah. I had a question from Anonymous that I thought was interesting. Rightly or wrongly, I don't think of this as an investment conclusion tool, but more value added as a day one hypothesis formation technique. Basically enables you to break down an investment case into key variables very quickly with desktop research. This could then serve as a guide for primary research to really stress test a hypothesis, being more informed on key sensitivities than you would have been otherwise been. And I think that personally that hits the nail on the head. To me, a lot of the use of these tools is like a much better version than Google. Like Google is not an investment conclusion tool, but if I try to Google a bunch of things, I get sponsored links up top. And even if I use this tool to find the size of the fleet and the value of the fleet and so the underlying data points to do exactly that kind of form my hypothesis, I would very much co-sign that argument. I'm not sure how you would may agree or disagree with that, Brooker.
Yeah, I definitely agree. Like, I think like we got pretty far in 45 minutes, and I think that's like it's going to get you to the place where you can know where to focus. And so I think like the focus from here was like unit economics, trying to drill into like who can actually make the money, dividing the world into the two TAMs of I think someone mentioned this comment, but like there's the sale of the cars and then there's the robo-taxi TAM. Like, okay, you got to think about both of those probably separately. And there's margin to be made both on both of those. And then it's like the key question is how is a dollar going to flow through this system? Like who has the power in this system? And so you spend your time on those answers. And so you just did like 10 hours of research in 45 minutes, and now you know where to focus.
Looks like we have a question from Paul.
Hey, Booker. Thank you so much for this presentation. One of the goals of Arvind was to make like Perplexity like a Bloomberg for like an average person. I think that's one of the goals he stated publicly is like you could have this tool with you which would kind of equal like level playing field between like an institutional investor and a retail investor. What are your thoughts on that, and how far do you think we are to kind of achieving that goal? And do you think like if we had some of those sources that like someone using a Bloomberg would have access to, maybe the research that we're getting on Perplexity might be like a bit more reliable for you even, Brett?
Yeah, I mean, I love that goal. It's like one of the reasons I joined Perplexity was for that goal to build this terminal for everyone. And we're adding sources to be able to make that possible. And so we have transcripts in here, we have SEC filings in here, we have basic fundamental data. You can download that fundamental data. We'll be adding even more in the next like month or two. And I think that's like we want to deliver something for free that is getting pretty close to a Bloomberg terminal. Obviously, we're not going to have chat in the same sense of like a $30,000 entry fee for a chat network. But we're going to have a lot of the similar tools, and we're going to be really powerful because we're going to have that search front end. And so I know there's like a little bit of the discount on the web, but I really would encourage like to check out some of these sources on the web. Like it is incredibly accurate when we do run tests. It's the reason why Perplexity like scores so high on accuracy is because the web is such an incredible resource. So I think you really like do need the web. Even if we had every single piece of data in that Bloomberg had, I think you still would rely on the web for a lot of your answers.
Thank you.
And I think Paul, that's like the challenge. And like candidly, I don't think anyone has solved it yet. Where I think you have kind of three big vectors here. You have the data and information, you have the kind of workflow overlay, and then you have the engineering and model. And bringing all three of those together in a portal is going to be, to me, is like the trick of like creating like the AI enabled Bloomberg competitor. I mean, historically, the innovators haven't, historically, the incumbents haven't been the innovators for all sorts of sorts of reasons. But yeah, I think that's a sort of like promising vision of this trend in my mind.
Sorry, Brett, one more question if I have a chance.
Of course, yeah.
Yeah. So if you think maybe like the resources that's being fed into like a Bloomberg terminal are the same, are the exact same that's feeding into Perplexity, would you trust like a Perplexity model? And the answer is a lot more than what we saw like in this demo.
Yeah, for sure. I mean, I think that like, one, there's all sorts of like arcane challenges in these tools, right? For example, Wall Street has come to trust FactSet, CapIQ, and Bloomberg data because there's click-through visibility to the end filings, right? And so if I'm in a FactSet portal and I see an adjusted number, I can click through and see where that adjusted number came from a filing. So I think so that's the sort of like standard of data accuracy, and that's what I like about Perplexity. I like the ability to actually click through and see the sources. So to me, it's a great innovation relative to some of the foundation models where there's a less sort of like direct visibility. It's more kind of like a trust me, bro, on the sourcing. I found this. I came to this conclusion via my word calculator of looking at all the tokens on the web. And I think that sort of like that's a challenge that we have as institutional investors with the consumer models, right? So I think Perplexity is great in that sense of sort of like the click-through visibility to the sources. Even in this case, which I would say like didn't go that well, but at least I can see that the TAM conclusion came from a data source that I personally wouldn't trust in an investment. So that to me is an innovation relative to an open consumer model that is giving me this black box TAM conclusion, and I don't know where that came from. So yeah, I think very much the standard I hear from clients is like these tools are getting way better. They're certainly way better than they were 6 months ago, but they're still not perfect. And that data integration, to me, is like a big one to crack.
Thanks, guys. Thank you.
What else do we have?
We had an interesting one. We have a question where someone says, I'm an institutional guy with access to Bloomberg. Despite that, I find myself going to the Perplexity dashboard on earnings days with release summary, live transcript, extremely low latency, and key news on the side. Is Perplexity planning on building this out even more? What else could be added in the near to medium term?
I'd love to hear that. So yeah, we've got the live transcript. The stuff that we will be adding in the near term is, I don't know if you've seen it, but in the last week we've added the financials. I showed a little bit of that. And so you get the key stats, which looks fairly similar to Bloomberg. So historical financials, you go in there, you can download that. And then you can see in the future, we'll add estimates to that as well. And then to Brett's point, we really want to add like more premium research in here as well for everyone. And so on the roadmap, we'd love to get more of that. So we're working on deals to be able to offer research so that when we do a TAM analysis, we can make sure Brett believes it. And so, when we come up with these numbers, we can link it back to like a vendor that you would know. And so I think, yeah, research and estimates would be very near term.
Yeah.
And I think someone else asked about.
And I would add to that. I mean, we just spoke to a client who's using Bloomberg, the AI portion of Bloomberg, and between B Lab and Bloomberg Analytics, I think they were paying $500,000 for those sort of add-ons. And so there's a few comments of like, how does this compare to Bloomberg AI? Well, like one big simple comparison is cost 500,000 versus, was it $20 per seat per month broker? And so I'll also kind of keep that in mind as we think about this tool in context. This one I'd love to hear your answer. What does that mean? We'll get sell side research in Perplexity. That would be awesome if I could get a full stack of sell side research initiations primers. I don't know how we crack that nut with the permissions of Wall Street, but what are your thoughts on that, Brooker? Is that a potential?
That's a very hard one to crack, but we're definitely aware of that, and so we hear it from a lot of people. It's one of the top requests, but it is hard to crack.
Yeah.
And we,
Is
we
that
also want to give a product to every day to every people. Like we do 30 million queries a day. The sell side research would just be for entitled clients. So we want to give something to everyone as well. So yeah, it's hard.
Yeah. What else?
There's a lot in the chat.
Yeah, they keep coming. Maybe time for one or two more. Andrew, any that tickle your interest?
There was a follow-up from the excluding data where somebody adds that Perplexity should have the complement to add to follow-up or prune from context. This means like less of a radio option to filter out like between web and financials and more like negative memories in the memory feature that's being added to just say for all queries exclude these particular sources of my naming.
Yeah, you could create spaces, and then in spaces you can actually add links that you want to prioritize. So you can more so like prioritize sources and then use the prompt to prioritize sources. So it's just say, publish, ignore blogs, focus on popular publishers.
Yeah, that would certainly probably be something I would do. I mean, anyone can publish a blog. Is there an integration with Substack, Brooker? Because there's some real high quality work being done on Substack as well too. I know those aren't on the open web, but could I integrate with could I pick and choose the Substacks that I'd want to source from?
Yeah, I'd give it a try and see like if it's behind paywall or not. We'll determine it, but I would just put a link of your favorite Substack authors in there, and see how it works. But yeah, I think there's really high quality content on Reddit. I think there's really high quality content on X. It's just about knowing knowing which ones to trust. And I think someone asked this, like, how do we do that? Perplexity index the entire web, and we index it for an AI world, and so it gives you like a score. And so when we're looking at those sources, I think like they're still like a higher quality than a lot of other sources. Kind of like that feel of like what would be those 10 blue links in Google. And so maybe you don't recognize them all, but you'll see some that you recognize. And I think it wasn't that far off. Like it was at the 2 trillion TAM estimate, 100 billion or so. I think return on that. And so I think we're like kind of ballpark in the right spot with those posts, but I think like getting brand name is going to add a little bit of value.
Yeah. Question from Mary. There are many AI software focused on investment fund managers like AlphaSense, FinChat. How does Perplexity think about competitive positioning against these players, especially when Perplexity is doing a lot of sectors, including finance?
Yeah, I think like first of all, we're doing 30 million queries a day. We're really trying to give you answers to tough questions as a knowledge work. And so people are using us over Google. And that's who we think about as competitors, and OpenAI as a competitor. In terms of positioning ourselves against AlphaSense and FinChat, we talk with FinChat. We just launched a product with them, giving you real-time metrics right after a company reports. So like within 15 minutes of a company reporting, you'll see those metrics on Perplexity. So we'll probably look to partner with them. Like we've done a deal with FactSet as well. We'll look to partner with them because they have really good data. And so that I think it's more about partnering with a lot of these players and focus on competing with the big guys.
Yeah, that makes sense. Great. All right. Any closing thoughts? Should we go back to our investment views?
Oh yeah.
On the
Let's see
stocks?
if Perplexity changed anyone's mind here. So I'm gonna share my screen. So jumping here. You want to go first, Brad? Did you change your mind, I think?
Yeah, listen, 100 billion, 100 billion operating profit potential on 100 billion base business is not nothing over 10 years. So I would kind of, to some degree think that there's not much in Google's current price for that. I think, a lot of questions left unanswered on the technology and competitive dynamics and scale. So I kind of stay like unsure on Tesla and Uber. But I think listen, this is a gigantic TAM as we kind of got to, and we'd want to do more on the unit economics. But if we can really get to kind of 40, 50, 60K of revenue per car per year, and the stat that you pulled up, Brooker, on the Waymos being 200K, but expecting that to go down over time. If Waymos could in 3 years be 75K per, in terms of CapEx, and revenue per car is 50K per year, the drop through on that's 20, 30, 40%. All of a sudden, those are pretty compelling cash economics. So the cash economics probably don't look very good today. That's kind of partly a bet that you're making, is that the technology, the tech stack, the R&D productivity can increase to kind of lower that cash cost. Obviously, Tesla's a big wild card in terms of their entry. But yeah, I would say no conclusions, but some interesting sort of tidbits of research inputs along the way. What about you?
I think I mixed it up for sure. Like I didn't really understand the weather factor as much and the regulatory and the capital required for it. So I think that like changes it a bit, and so I'd want to go like really deep on the Uber partnership with Waymo and understand like what economics were struck in that deal, like who won in that negotiation. Because I think that will like give you a tease as to like who could win in this industry. But I'd probably like shift Uber up higher, given like how huge of an impact. So it's like, okay, it would 10x the size of their business if this did happen. So you have like insane upside, and you're trading at a 15x PE. So you have like limited downside. And if it is going to be like a cutthroat competition between Tesla and Google, and they're going to require, trillions of dollars of capital to build this out, like Uber could be an amazing player for this. So I forgot about the Ackman thing. So that one definitely went up, but I'd still put Tesla above Google.
Yeah, that's interesting. I mean, one of the kind of things that came out of this when I was looking for priors with AI tools this morning, one of the priors that came up were the scooter industry, Bird, right? Bird, it has some very different dynamics, but has some similar dynamics too, in that the cash on cash economics when people first analyzed Bird looked pretty good. But as more players came into that market, utilization went down. I agree with the thought that if the barriers to entry lower via the tech improving and it's easier to enter this industry, that could kind of pressure economics, and it could that value could accrue to distribution rather than hardware. So not sure if I have any even semblance of a conclusion there, but maybe a couple kind of questions to follow up on.
Yeah, let's put this on YouTube, see how it ages, and would love, post
That
some
will be
questions.
fun. That will be fun, because what will be really exciting is we'll do this in 9 months, and it'll probably spit out something that's like, holy crap, this is good. So it's good to put a line in the sand, get a litmus test for where we're at, if we did this 9 months ago, we probably wouldn't have even gotten anything insightful. Well, thank you for your time and participation, Brooker. This was fun and interesting. And thanks for all the great questions. And look forward to seeing everyone else on the upcoming episodes of Cutting Edge. Thanks a lot.
Right.